Today, I'm going to share some of the latest data about what's happening to our various property markets. I'm going to do a deep dive going through state by state, showing you where the supply and demand imbalances are the greatest, showing you where you have the greatest potential for capital growth and where the areas where capital growth could be a little constrained. I'm also going to share with you property price predictions on a city by city basis, focusing on our capital cities. And if you stay until the end, I'll share with you a leading indicator for property price growth and why when this indicator moves upwards, property price growth has always gone upwards as well. And I even got some data from the actual CIA to back up what I'm saying. So if that sounds of interest, stay tuned. Hi, it's Nero here, and now it's Westpac's turn. After predicting that property prices would drop by 18% from 12 months ago, and that Sydney and Melbourne and Hobart would fall the most, now Westpac have come out and said, whoops, sorry, we were wrong. We expect property prices now to rise this year and also into 2024. Let's have a look at what they had to say. Australian housing on track for sustained but constrained price rises. Australia's housing market recovery appears to be on a much firmer footing with momentum maintained despite further interest rate rises. Westpac now expects the recovery to sustain with dwelling prices forecast to rise 7% in 2023 and by a further 4% in 2024, but stretched affordability looms as a major challenge medium term. Then if we look at some of the main points, it essentially says that the upgrade in their forecast follows continued momentum, improved near-term outlook for rates and growth, that interest rates assessed to have peaked and an easing cycle to begin in September quarter of 2024, so about 12 months from now. Westpac then go on to make the following predictions about what's going to happen to our various capital city markets. Sydney is expected to rise by 10% in 2023, 6% next year. Melbourne, 4% this year, 3% next year. Brisbane, 6% this year, 4% next year, and then Perth, 8% this year and 8% next year. Now, I don't know how they came up with these figures for how much property prices are expected to rise, okay? What I would rather do is instead look at the data and show you where the best potential for capital growth lies rather than relying on these fluffy figures which seem to change every 3 months. So let's begin. So here we have data from the CIA. Yes, I kid you not. You can see here on the left it says CIA.gov. It's a CIA's website, okay? And what we're looking at here is population growth. And what you can see is that Australia in 2023 is expected to grow by 1.19%. Now that's higher than New Zealand at 1.06%, higher than Ireland at 0.91%, significantly higher than the US at 0.68%, and higher again than the United Kingdom at 0.49%. Now, of course, most of this population growth in Australia is expected because of overseas migration. And remember, the federal government has opened up our borders completely, and migration right now is at all-time highs. Here we have some very detailed data about the population growth on a state-by-state basis. Now, if this gets a little heavy, stay with me, because when we go through this data, you're going to start to see how we can identify the best places to invest and why many of our clients in the last 12 months have seen capital growth of 10% to 20% on average, even though the median house price, according to CoreLogic, has dropped by 3.4%. Okay, so let's deep dive into this data. So looking at the first table, table 1, population growth, okay, 2022 to 2023, we can see how much our population is expected to grow on a state-by-state basis, okay? Victoria is expected to have the highest number of people moving there, followed by New South Wales and then Queensland. Overall, we're expected to have over 500,000 people moving into Australia, according to this data, which comes from Matusik. And then you can see from 2023 to 2024, our population growth is still expected to be really high, okay? Again, Victoria leading the way, New South Wales still well over 120,000 people, Queensland nearly 100,000 people, and then the other states getting a lesser share, okay? Now this is overseas migration. This does not take into account domestic migration, people moving from one state to another, okay? What it shows you though is that clearly we have a lot of people coming into Australia and on a state-by-state basis. Then we need to look at the underlying housing demand. If we now look at this second chart, it tells us about what the demand is for housing on a state-by-state basis, okay? And if we look at just 2022 to 2023, we can see that in New South Wales, we need over 70,000 new houses, Victoria over 80,000, Queensland over 60,000, and then the numbers drop off. But then when we look at what happens year on year from now, based on forecasts until 2027, we can see that the numbers are still pretty high. In fact, if we look at the averages, okay, of what's happened for the last 5 years in terms of demand versus what's expected over the next 5 years, the demand actually increases, okay? So therefore, that means that we would need to be building more homes on average than we have over the last 5 years to keep up with the demand. And the difference is quite staggering. Have a look at this. The average demand in New South Wales for the last 5 years was just under 31,000 houses. The next 5 years, we're going to need over 58,000 houses. In Victoria, over the last 5 years, the average was 33,500 properties needed per year. For the next 5 years, on average, it's a staggering 72,723. Queensland, last 5 years, 42,000 odd houses were needed. Next 5 years, 48,500 houses are needed, okay? And if you go through the chart, you can see that literally in every single state, we're going to need, on average, more houses over the next 5 years than we've been building in the last 5 years. So are we then building enough properties? That's the key question. And that brings us to table number 3, dwelling commencements. And what you can see here is if we look at the financial years for 2022 to 2023, we built 46,362 properties, dwellings in New South Wales. Victoria, 55,500, Queensland, 33,386, and so on. Now, if that doesn't sound like enough, you are right. And the next table really shows us this. Here we have the difference between supply and demand. And you can see in New South Wales, we failed to build enough homes by a staggering 26,113 dwellings. Okay, in Victoria, the number was higher at 28,672. In Queensland, it was higher than New South Wales at 27,518. In fact, in every single state, we failed to build enough properties. So therefore, if we now add up all the figures to look at demand over supply, where are the supply shortages the greatest? It brings us down to 3 states. Number 1, Queensland has a shortage of about 18%. So that means that for every 5 households that move to Queensland, only 4 of them are going to find accommodation. In Western Australia, it's higher again at 22%. And finally, Tasmania at 26%. Okay, so these are the 3 states that have the biggest supply shortfalls, okay? Now, does that necessarily mean that then you just go and buy blindly in these areas because you think these areas are going to rise the most? No, okay? This is the first level of research, okay? So for example, Tasmania right now, Hobart prices are among the weakest in the country, okay? Remember though, Hobart had a huge boom previously. So you might want to look further then to see if a lot of the price pressure, upwards pressure on prices, has it already been built in? Has Hobart already jumped because of these supply and demand pressures? Okay, personally, I believe it has. So that's why I think, Queensland has a huge potential for capital growth, and so does Western Australia. Now, I'm not saying that parts of New South Wales won't rise in value. I'm not saying parts of South Australia won't rise in value. They definitely will, okay? These are just macro level data. Because remember, there are markets within markets, but at least it gives you a good sense of where the greatest potential lies for capital growth on a state-by-state basis. And then if we look at this next chart, which talks about dwelling turnover, okay, you can see that it's been trending lower since the 90s. Okay, so this housing crisis that we have right now, it's not recent. It's been building over a number of years. You can clearly see that the black line is trending downwards, okay? So what that means is that people are living in their homes for longer, they're not selling as frequently, and that means that when we're not building enough properties and owners are staying in their properties for longer, which means there's less turnover of properties, less properties for sale, and we've got all this increasing demand coming into Australia, it's going to force property prices higher. One reason why many of the banks like Westpac are changing their predictions, it's because they realize that this fixed rate cliff that they were concerned about is not materializing at all. Default rates are still at long-term averages. In fact, it's below 10-year averages for most of the major lenders. That's why we will get through this fixed rate cliff with very minimal impact to the property market. Sure, it may slow the rate of price growth temporarily. That's why I think 2023 is a great year to buy, because with all of this data that we're seeing, and there's one more chart to come, hopefully you can see that property prices are set to rise in many areas around Australia. That's why I'm so bullish on property prices. That's why I went and bought as much property as I possibly could back in February of this year. So now let's get to the final chart, which in my opinion is one of the best leading indicators to show you what's expected to happen to property prices. Here we have the new loan commitments for all of housing in Australia, excluding refinances. And what you can see is that after a dip in 2022, it started to increase. And when new housing commitments increases, that means there are more people either getting bank pre-approvals or getting loans, okay? That means that there is demand for housing. And every single boom throughout history has been preceded by an increase in mortgage growth. So, translation, when you see an increase in mortgage growth, property price growth has always followed, and I expect it's going to follow again. So hopefully that gives you a really good indicator of what's happening to property prices around Australia, why I think now is the best time to buy if you can afford. But yes, you do need to do your due diligence. You can't just buy anywhere because some areas will struggle, so you need to do your due diligence. And if you want help with that, check the link in the description to get for free the digital version and audio version of my book. And if you want to find out more about our buyer's agency service and how we can help you find investment property that's expected to outperform the national average, you can see the link in the description as well. I hope you've enjoyed this. See you next time.